Good morning and welcome to another episode of Beyond Bitcoin. My name is Derek Graham and I'm here today with Nitin Gower. Hello Nitin, how are you?
Hey Derek, I'm fine, just back from Hong Kong, but tired as you can tell, but glad to be here and back in my home office.
Terrific. And also today is our monthly market commentary that we're going to do each month with Greg Galton. Good morning, Greg.
GM Derek, how are you?
Hey, excellent indeed. Now, for those that are following us, remember, if you like what we do here, please subscribe, share it with friends, and then you can keep updated with what we do. So generally, to give you an overview of that, we do one macroeconomic market review each month, one detailed market review each month today, and then we do two tech deep dives where Nitin and I invite interesting guests on and we deep dive into tech. So we have been doing Beyond Bitcoin now for, wow, nearly 3 and a bit years. That's like 150, 60 episodes now.
Long time.
Long time.
Yeah.
So we're used to bringing in information and sharing it with people on the way. Now today, we're going to do some high-level discussions on the market, just so that everyone gets context of where this market is up to right now. And then we're going to get Greg to go through the recent market movements, his view of the different sectors, etc. on the way. So bear with me for a moment because I'm going to go through this. Market cap at the moment sitting at 2.26 trillion. And that's down from 2.77 trillion between the period of March 18 and May 13. So we're talking 18.4% or so in the last 56 days. Now, there's 2.4 million tokens out there. For those of you that remember the last episode, you will know that a lot of those are meme coins. 764 exchanges, so right around the world, there's a lot of centralized exchanges still in operation. BTC is 53% of the market capitalization. So that's what's called the BTC dominance. And E sits at about 15%. Since 2020, BTC's dominance has varied from about 70% down to about 37%. So 53% in actual fact is about average. And if you look at the fear and greed index at the moment, it too is sitting at about neutral at 52%. Now, so much discussion. Like last week when we had our interview with that wonderful 15-year-old man whose name we called Galton. Galton is a meme coin trader. Really, he just made it. He just said it as it is. He's a shitcoin trader. Excuse me for a moment. I'm always uncomfortable saying that in a recording, but nonetheless, he's a shitcoin trader. And we love talking about them along the way. But the meme coins represent an amazing capitalization of 55 billion. But out of 2.26 trillion, the meme coin percentage is only 2.43%. It's a tiny percentage of the market capitalization. Chances are, Nitin, that it's probably 2.35 million of the tokens that are out there, maybe even more. And of course, this is the outcome of an open source, digital environment. People just lift the open source, create their own. I have a friend whose sons have created a meme coin. It's very common. For those that get excited about it and say, oh, meme coins are dominating the market, or look at meme coins, what they're doing to the brand of this space, 2.43% of the market. So I would consider maybe the more building block sections of this market, things like decentralized finance. And we would look at them as the sort of the commercial engine room of this future digital economy. And that capitalization at the moment's sitting at about 93 billion. Again, just 4% of the crypto market. The AI tokens, which we particularly, Radiance Fund, is interested in along the way and is part of the spread of investment, they're about 43 billion of the capitalization, or 2% of the economy. So what I think this is showing us is that this is really a very early emerging digital economy, which all of us believe in the future is going to be probably a dominant position in this growing future commerce. So we see, the future of commerce being how assets are created, how they're accounted for, how they're transacted, how they're invested, etc. But this space is still so very, very early. So the reason we're bringing Greg on each month now is to help us navigate through this space and help us understand what we're going to see with these interpretive trends that are happening on the way with artificial intelligence and decentralized finance, and obviously things like metaverse and sci-fi and et cetera along the way, and to probably get a better, more disciplined view of it. I mean, we had a wonderful view of how to trade meme coins last week, so we're equal opportunity here, but this time we're thoroughly looking at the disciplined way of doing this and in viewing in this marketplace. Greg has got 20 years as a senior institutional grade equities analyst, but 5 of those years as a deep dive analyst and a self-proclaimed degen. So I'm hoping, Greg, you're going to help us have a view of this marketplace, which is dominated by Bitcoin, has the color of what we see as meme coins, and has these early building blocks that are coming through as decentralized finance, et cetera, et cetera. Greg, a long introduction, but welcome along.
Thanks, Derek. That was a fantastic introduction and a lovely segue. So, yes, there is so much every month to talk about, so much happening in the market, as you say, and so many different areas. And I think the TLDR of what you said is that we're still so very early. I think that's the key thing to take away from what you've said. I have an interesting view on meme coins as well. Actually, I think they are a way to bring normies into the space. Yes, it's not great that they're coming in on gambling their money, but if they do have any, it's getting them used to wallets, it's getting them used to interacting with the ecosystem, and hopefully if they do stay, if they do make a little bit of money, they put it into Solana DeFi tokens. So, you've seen a significant growth there in the likes of Camino and Drift and a few of these other DeFi protocols that have emerged on Solana. And Solana's TVL now is Ethereum. It's certainly approaching Ethereum in some of these areas. So, it's bringing people in, and it is the future of finance, or the that so many talk about, and it's just it's incremental, but it's still building. But just talking about the market, I guess April was a really tough month for the crypto market. It's probably, I think, it was the worst market we've seen since April 2022. From memory, you had a significant sell-off. I think a combination of factors there: the rising geopolitical risks, and what was seen as a real hawkish shift by the Fed. So, as you know, risk-on assets are driven by liquidity, and there was an expectations that the Fed would have 3 or 4 rate cuts this year. The recent economic data really is not continuing to show that inflation's falling enough for the Fed to do that. And so their language was basically talking down the expectations. That saw a vacuum cleaner applied to the liquidity markets on the derivatives for some of the altcoins. You saw ETH down over 17%. Some of these large cap altcoins were down 30 to 40%, primarily because the open interest was withdrawn from the derivatives market, and you just saw a complete lack of demand, lack of buying. So, probably quite a bit of profit taking as well, because a number of those, Solana, for example, have been up quite strongly the month before. So combined with a bit of profit taking, they were down, around about 37% for the month, which is a huge move for a large cap token. But that's the volatility that we see in crypto, and as we keep saying, that the volatility is a feature, not a bug. That allows people to make outsized returns in cryptocurrency markets. That's why we love the market. That's why it creates those opportunities for us, and for the market participants as well. So we've seen that very, very weak month in April. We've seen a bit of a recovery now into May. Bitcoin has tested and retested the 60,000 level now, I think around about 5 times. So that was an area of key resistance. It's now looking like support. It needs to continue to hold that level. But let's see how things play out this month. Let's see what the economic data out of the US has, what the SEC is doing. You will note, you probably will ask me the question about it, but I'll get in early. You've seen the SEC issue Wells notices to Uniswap, to Consensus, which are the guys behind MetaMask. That follows a while ago of the SEC looking at Ethereum. I think around the date they moved from proof of work to proof of stake, they started looking at Ethereum and reconsidering whether it's a security or not. That's going to have could have some pretty significant implications for the Ethereum ecosystem and the DeFi ecosystem within Ethereum. So let's see what happens there. I mean, I don't think that these lawsuits are going to have any major surprises, and they're all pretty much priced into the market now. And they will take some time to come through, and the various CEOs of these, of Uniswap and Consensus have come out and said that they will defend these vigorously, and they don't see any case. But it's just another attempt by governments to restrict the ability of using cryptocurrency assets, or actually, I should say, in particular, one country in particular, because I think we've seen some interesting moves from other countries recently in regards to using crypto as a reserve currency. But I might leave it at that as a sort of quick overview. Yeah,
Good on you.
hand it back to you, Derek.
So, firstly, can I acknowledge your dog in the background shouting out, saying,
Yeah,
please mention
even
Bitcoin.
he agrees. Even he agrees.
please
Sorry about
please
that.
mention Bitcoin, please mention Bitcoin. And then finally, you mention Bitcoin and the dog goes quiet. You have been talking to that
That's
dog,
right.
haven't you?
I have indeed. Yeah. Sorry about that.
The dog is trained. But Greg, let me double click on a few things, right? Because I'm returning from Hong Kong Bitcoin conference, and there was a lot of conversation on ETFs, both comparing Hong Kong ETF, which is in kind, versus US, which is cash creation. I think many of us who've been involved in this sort of market infrastructure understand the reasoning behind both the risks and challenges with in kind versus in cash. And we've also seen a lot of outflows, which has been consistent in the last few weeks due to price pressures and ability for the entities who are involved in sort of capitalizing on the rise that we've seen a few weeks back. But we've also, so there's one angle of this securitization and sort of the TradFi coming into the space and bringing this large swath of capital in this risk on risk off equation that we've seen both in the interest rates and global macro situation that you described. But what I've also seen, especially in, again, the entire focus in the Bitcoin Asia conference was around Bitcoin, of course. But I've had a lot of conversation both in terms of using Bitcoin as a reserve asset. And we've seen this week, especially with Japan's debt mounting, the entire debt situation getting worse. Metaplanet has used that as a reserve asset. We've seen Bitcoin treasuries. There's a whole website dedicated to it, which looks into both corporates and countries alike, including the likes of El Salvador, trying to use Bitcoin as a reserve asset. There's a whole conversation on Bretton Woods 3, which is commodities as collateral. Inching towards both sides of the equation where large swath of capital comes in, you have a drawdown, impacts Bitcoin pricing, you have a demand curve going up and using Bitcoin as treasuries. Where do you see the balance, which eventually has an indication of the price of Bitcoin moving forward? Because there's a bunch of reports which provide conflicting views, both from traditional finance and the analyst community, as well as the Bitcoin analyst community in terms of making this huge price projections with 250,000 by the end of this year or 1 million by the end of 2030. How do you see that sort of unfolding from your vantage point?
Yeah, there are a huge number of factors at play there, as you say, and I think it will be interesting to see how it plays out. Now, I think you can go back to an interview that Michael Saylor gave a couple of years ago, and he said the three things that he wanted to see, or he thought would drive Bitcoin to $5 million. That was his target, not mine, Derek, so don't get too excited. Was firstly spot ETFs. The second one was the recognition of a true and fair accounting standard. And the third one was custody by banks. He thought any one of those would see a significant drive in demand for Bitcoin. We've had two occur already, so the spot ETFs and the fair value accounting. So it's much easier for corporates to hold Bitcoin on their balance sheet now. They can market to market rather than being stuck with some archaic deferred intangible cost basis. And the third one, as you said, Nitin, is banks now looking to offer custody for Bitcoin, which will allow it to become collateral and people to borrow against it. So people will be able to leverage up their Bitcoin holdings, not people, but organizations, institutions. we'll be able to do that. You're also saying BlackRock have just come out in the last week or so talking about the growth in demand from pension funds, sovereign wealth funds, that they're all coming to the Bitcoin ETFs. They see that as a huge growth opportunity. A lot of these funds, these pension funds, are slow to bring these products onto their approved product lists. That's happening, and as that continues to sort of flow through, you'll see that continuing demand. But yes, we did see outflows of Bitcoin out of the ETFs during the month of April. We're already seeing those funds recover now back into inflow. So still some significant buying pressure there. But I think net, these are really significant tailwinds that over the course of time we'll see a significant underlying demand for Bitcoin. Of course, there's only now 3.125 Bitcoins mined per block after that halving. You've seen basically, the supply halve. You've seen some old Bitcoin wallets come back to the market, potentially taking some profits at sort of above 70,000. I mean, that's sort of providing a little bit of extra supply, but there has been a lot of demand for OTC Bitcoin by some of these large organizations. So there's not that big a supply of Bitcoin that's traded on the market. And let's not forget that there's probably 3 or 4 million Bitcoin that are lost forever in hard drives that are corrupted or on rubbish tips in Wales. So it's a lot of factors, but I think all of them driving underlying demand for Bitcoin, and supply is continuing to shrink.
Got it. Just another tidbit, Derek, since we're coding all these numbers, I'm looking at this bitcointreasuries.net. About 70 companies have Bitcoin as a reserve asset on their balance sheets, amounting to about $20 billion approximately collectively. And I'm not even counting this is minus Michael Saylor's MicroStrategy. And then you have close to about 50 funds who collectively have 62 billion on, as a part of their investment sort of. So it's still a significant number as a part of the overall, using Bitcoin as a treasury, not as an investment instrument, which is an interesting metric, I would say, Greg. And I would say one more thing. I think in the investment landscape where Bitcoin is used as an investment instrument versus Bitcoin being used as inflation hedge and dealing with a price stable asset that has store of value, I think there's a significant difference between the ability for the inflows and outflows versus using it as a treasury instrument. And I'm going to spend some time researching that, but I think that is a significant shift that I've seen from the last 2 years as, again, changing narratives around Bitcoin, both as an as an investment instrument, as well as a reserve asset, I think, which will be interesting to see how it evolves.
Yeah, and I think the implication of that is volatility on Bitcoin will slowly reduce. It's something that's been historically exhibited high periods of volatility, but I think the more that are held in treasury, that's unlikely to hit the market, and I think you will start to see Bitcoin's volatility fall over time, which is consistent with a maturing of the asset class and a maturing of the approach to how what you do with your Bitcoin. So I think those are all pretty positive factors, actually. Yeah.
Yeah, and one more, Derek, last comment on Bitcoin, I would say, only because it's fresh in my mind. I've had so many conversations in this conference around stablecoin on Bitcoin. This is a new sort of narrative that has popped up. Business models are being evolved around this, using Bitcoin as a collateral and having a stablecoin using Bitcoin with likes of banks. I've spoke to at least 15 banks at the conference. I've spoken to at least 5 mining companies, a dozen investment managers who have been talking about using stablecoin, with Bitcoin as a collateral. And that significantly changes the narrative around settlement instrument, moving from US dollar to Bitcoin. Something that we need to watch closely on this as the valuation of Bitcoin sort of goes up, which I was shocked and surprised to see so many conversations around this just have evolved in the last few months. So, something to keep an eye on.
Greg, that's interesting about Bitcoin. At the moment, one of our funds uses, Bitcoin as cash. We don't reverse back into US dollar stablecoins. We reverse back into Bitcoin because we're committed into the marketplace. And I think more of that's going to occur as Bitcoin becomes, considered to be the balancing, currency that you go to, rather than a fiat currency. But at the same time, funds are really looking towards where the industry is moving. And often that's where tokens that outperform Bitcoin as singular growth areas focused on. And so we, of course, and you, of course, have been looking into certain thematics, and maybe share some of those thematics with the audience of what you think is interesting along the way through, and maybe share a token and your views on that. Remember, audience, none of this is investment advice, but it's really good to get down into the sort of the gritty area of the important area of why we see logic in certain token investments.
Yeah, sure. And I guess I'll just start that off by saying that I always think of token prices relative to Bitcoin. I never really sort of focus on them relative to fiat or US dollars, because, we as an investor in the space, you're looking to stack sats. You're looking to add Bitcoin to your portfolio as an individual investor, and as a fund, you're looking to outperform Bitcoin. That's our key thing that we're looking for. Yes, we have the benchmarks that we look at, but ultimately, Bitcoin is the biggest and the biggest benchmark out there. So we always look in terms of when assessing a token, is this going to outperform Bitcoin over the medium to long term before we consider putting it in the portfolio, in the fund. And I think that's one of the key issues there, to really sort of, it's a change in mindset to not wanting to come back to fiat all the time, but to be staying in the ecosystem and valuing yourself within the ecosystem. So I guess that's the sort of preamble. And then what we look for is the narratives that have, that are strong. And I think, the AI narrative, I know it's been overdone, and I'm not going to really sort of dwell on it too much, but what Web3 or blockchain brings to AI is it brings decentralization. It potentially takes some of the power, the processing power, out of single entities, i.e. large companies, and decentralizes that across a number of different servers. And I think that's probably the biggest thing that the application of AI tokens on the crypto blockchain provides to the ecosystem going forward, is a way of, and potentially it's revolutionary, is that decentralization that the crypto or blockchain brings. That's one of the key reasons that we are so positive on the AI sector. We see the underlying demand, the sort of what's happening with a number of these different large language models and their applications, and the use of AI agents to then be given autonomous control to go in. But, certainly Web3 is the way of potentially reining in AI and monetizing it, making it free for, not free for all, but free access for all, and really providing that decentralization as an overarching sort of thesis. And look, on DeFi, I think, Solana, I sort of mentioned it before, really has been very strong in the last 12 months in improving its tech stack. We've got the Fire Dancer upgrade that's coming through sometime this year, which will certainly improve the processing time and the transaction processing time. And I think you are seeing now more protocols using Solana because of the very low transaction fees and the very fast transaction processing time. So, for example, Helium moved from their own blockchain onto Solana for this very reason. You've had Solana have done a deal with Visa, looking to become one of the payment rails in crypto because of these characteristics that Solana possesses. And now you're starting to see a maturity in the stablecoin usage on Solana, which is bringing funds into DeFi. So we've sort of seen that transition. Solana is no longer sort of seen as an NFT / meme coin. The tech stack has improved enough. The dog's barking, so I need to talk about Bitcoin shortly. But it has improved the tech stack substantially, that it is now suitable to be running DeFi chains on. And we've seen a lot of people put money in because they've been playing the airdrop game. And the airdrop game has been pretty successful for a lot of investors over the last 2 to 3 months in particular. The likes of Wormhole, Jupiter Wallet, and a number of different protocols have airdropped quite significant amounts of money sometimes in the 5 figures to people that have used their products. So this is bringing a lot more funds into Solana. It's one of the reasons that we are positive on it. And we do quite like the Jupiter Wallet, which is an aggregator on Solana. Yes, it is sort of benefiting from a lot of the meme coin trading that we're seeing, But with more people using these DeFi protocols and the liquid staking tokens on Solana, you're seeing quite a bit of movement through Jupiter as well. It's been trading for just about 3 months now. It's sort of settled down around the dollar level. We think it's probably a reasonable valuation at these levels. There is, plenty more airdrops for users to come over the next 3 years, and one that's probably, worth keeping an eye on for the future. Sort of that growth in the Solana ecosystem. So, that's certainly an area that we're continuing to look at. And I think the other area really is the L2s, is the scaling on the various chains, and we've talked about this before. But I note that Stacks unfortunately had a bit of a pullback last month because they deferred their Nakamoto upgrade, which is a key thing for us, I think, going forward for them. But it's only a delay in timing. But I think sort of coming back to Bitcoin to keep the dog happy. The sort of the growth that we're seeing in L2s on Bitcoin is certainly very, very interesting. And it does augur well, and it's sort of it's sort of complementing what we're seeing on the likes of Babylon on Cosmos and Zeus on Solana, which are all sort of offering a Bitcoin staking option to earn Bitcoin by using Bitcoin to validate these proof of stake blockchains via proof of work. So it's an interesting sort of dynamic on that whole DeFi dynamic, merging into that L2 side of things and scaling. So interesting things to keep an eye on.
Well, it is interesting in the DeFi section. We talked earlier on that its capitalization was about 92 billion, and what that represented, I think, was some 4% of the marketplace. But if you look at the number one token, so to speak, that has influence on the capitalization that's on that space, it's wrapped BTC. So 14 billion of that 92 billion, again, is greatly influenced by Bitcoin. So we're seeing, that this solid outsized interest, despite the fact that Bitcoin's sitting at about 52% market dominance. As you say, Bitcoin, we look as if it's the stability, the token we reverse into in downward trends, and kind of the blue chip of that space. But as you say, the more it becomes blue chip, the less volatility it has, and the less volatility it has, the less trading opportunities that appear with it. On one side, that's the trading side. On the other side, as I keep mentioning, there's a real view that this industry, this entire essentially set of rails, and in some cases replacement for traditional commercial industries here. And if that's going to occur, the tokenization of real world assets are going to occur. If that occurs, decentralized finance are going to play a major role in financing those real world assets that are now tokenized. And if that's going to occur, we'll see more meetings in the metaverse. We'll see, more artificial intelligence analyzing and taking out spread in the marketplace. In other words, we'll see more things that are associated with, say, the non-gold, digital gold aspect of this space. So, I still have the view, and, for those that want to write me hate mail about not being always dominated by Bitcoin, go for your life. But I still have the view that if we're looking at $2.4 trillion or $2.26 trillion of assets here, or capitalization here in this market, if this market is truly going to take a role of steadily consuming commerce and changing the way we do commerce, Bitcoin's dominance should drop substantially. Would you agree, Greg, and also Nitin?
Yeah, absolutely. But there's $1.4 trillion worth of Bitcoin out there that doesn't earn anything, just sits in the wallets. Yes, you can use it to buy inscriptions or play with runes, which are basically just meme coins on Bitcoin. But whether we'll see the Bitcoin maxis willing to send their Bitcoin to Cosmos or Solana to earn a yield on it, I'm not so sure, to be honest with you. I think that that store of value is sort of in a pristine proof of work environment is still very attractive to a lot of people. The inflation hedge as a treasury asset is again very valuable as well. So yeah, I think we probably will need to see, but we're talking about onboarding the next billion people onto cryptocurrencies, right? And will it be into
Yes.
Bitcoin? Probably not. It's you look at the TON blockchain, which has come from
Yes.
Telegram, has had a huge run
Yes.
up recently, and that's a as I said, it's a Telegram based coin. Maybe that's the next way that we onboard the normies in, and then they sort of start using all the DeFi, and maybe the wallets become that sophisticated that we don't really doesn't really matter which chain we're on, and we probably don't even know which chain we're on, and we're just accessing DeFi from all the different chains without really knowing, and really sort of that's I think where you get the full benefit of this, and where the market cap for the sector as a whole just multiplies. So that's to me, I think that's what's coming. Don't ask me the timing, but it's coming.
Yeah. Yes, true. So 2.26 trillion, Nitin, total investable assets. You've often quoted as close to $500 trillion. We're really a flea on the back of this commercial giant of equities and bonds and private equities and investable real estate, etc. That flea shows capacity to be able to enable transactions to occur in this traditional area in the tokenization of real world assets, etc., and see real disruption. So what are your thoughts? Is this a journey to seeing Bitcoin become more representative as a percentage of the market that gold sits at the moment in this space? And so, is the upside going to be in the non-Bitcoin tokens over the next decade? Decade's a long time, 5 years, let's say.
Yeah, so I think from my vantage point, Derek, Bitcoin has already surpassed silver, right? So, and I think gold is around 11 trillion, if I'm not mistaken. And so we are inching close towards, and if you look at prediction from many of the pundits who are looking at this in 2030 timeframe, which is certainly going to surpass the gold. And I think there are a lot of analysis, both at Bitcoin conference, looked into, there was a time when gold was severely undervalued till the global inflation took over, and suddenly gold, I mean, this year alone, the RBI in India and many of the central banks actually have bought more gold than US debt. So there's a whole indication of inflation hedges around the globe. But to Greg's point, again, this year, there has been a lot of focus on utility of Bitcoin itself. Like, for example, all the ETFs and all the protocols simply hold Bitcoin in a vault. And it means that the asset itself is highly underutilized. So I think we had DLC Link on our podcast, which looked into building protocols that still gives adequate control of the holders to Bitcoin and still allows them to be able to engaging in converting them into staking protocols, to moving the proof of stake asset to a proof of work asset to a proof of stake ecosystem and staking these things. I think as these protocols evolve, and I would imagine the next 2 years, Derek, because there are some significantly well-funded projects who are looking into building the DeFi protocols, which have been non-existent on Bitcoin ecosystem, looking into building BitVM, which is technology that allows for smart contracts to evolve on Bitcoin, which allows the Bitcoin to be able to, in a multi-sig locking mechanism and so on and so forth. I think that will certainly increase the value because the utility of the asset goes up. And I would expect that at some point, when the utility goes up and Bitcoin reaches, let's say, above 100,000 or 250,000 mark, and there are enough predictions and modeling that have been done around this, it'll certainly surpass the gold valuation. That'll be a significant milestone, I would imagine, for Bitcoin to be a significant fifth asset class, as we've been discussing on this podcast. Yes. So that is TBD. I would say, Derek and Greg, love to get your perspectives. Is I would say this 4 to 5 years time frame when we begin to see that evolution go up. Meme coins, I don't know. I mean, the likes of Galton, who have highlighted their perspective, which is the young generation looking at this. And Derek, the last conversation to me was so enlightening. I view finance completely differently from how Galton looks at it. And if that's the next generation which views, and again, it values in the eyes of beholder, is looking into meme coins as an integral part of what me and you view Bitcoin, and Greg views Bitcoin and Ethereum as structural assets, and which means it's a whole 2.2% to that pie should grow as more and more normies come into the space who are viewing Bitcoin as one way to engage normies, which I think will be super interesting to see. I have no predictions on that yet, but I do have predictions on if Bitcoin reaches a certain mark, it will certainly make a big impact on the industry itself, I think.
So yes, but what about what's happening in the rest of the commerce? the tokenization of real world assets, the funding of real world assets through decentralized finance, maybe the realm of communications going into a metaverse environment. These are all things we talked about. The DAOs that are investing in sci-fi, which is decentralized science. These sort of really interesting things that are happening along the way. Do you see them growing more rapidly? I guess because they're smaller sections of the market, so they're smaller capitalizations than Bitcoin. They're also more volatile. While you see Bitcoin taking a position where it's going to dominate the sort of the capitalization of the market, do you see the commerce side of this market, the technology of the market, playing an outsized role over the next 5 years, in its growth? Greg,
from an RWA perspective, Derek, I'm closely involved in it because what I'm building at the moment, both for traditional finance and everything else, and I think I'm looking at the RWXYZ, which is like a dashboard, which looks into the overall investment, and the investment is somewhere around $7 billion worth of assets in RWA world. And that does not even include, digital fiat, which is stablecoins. Stablecoin is also a real world asset tokenized form.
Sure.
And that's reaching 160 billion from DeFi Llama. But the bigger metric to me is that it's going to surpass the Visa payment volume of 7 trillion. Again, there are two sides of that coin where Visa itself did some research in pointing out that 90% of that was real peer-to-peer, and 10% was real peer-to-peer, but 90% was really machine-to-machine. But I think Greg mentioned this before, that's the world we're going after. It's that machine-to-machine communication and ability for AI to be able to pay for services it's using. I think I see that as a entry point into the fact that 90% of transactions are happening between smart contracts. That's the digital infrastructure that we're looking at. And we simply need to understand and harness it and see where the investment is going and capitalize on that investment opportunity. Greg?
Yeah, I think there's tremendous amount of opportunities, but I think for me, it's primarily sort of in tokenizing things like securities, equities, bonds, those sort of real world assets. I think will be the first leg, perhaps, that we'll see, and that's already been talked about by Mr. Fink. And that one's pretty obvious to come through. I think I get a little bit more issues with sort of tokenizing property. I think there's some complications there around dealing with government entities, local government entities on doing that with property, but it may eventually come. But yeah, I think it's really providing that that backbone, that infrastructure backbone to financial transactions that's moving away from the old traditional finance way of doing things and is bringing it all onto the chain, onto the blockchain. And it's happening without us even knowing it. And I think that's where it becomes that ubiquitous, and we don't even know that it's happening. We're not even sure which chain it's on, and does it really matter? And that's really when it becomes, when it's really sort of taken over, if you want to say. And then the rest is, I guess, it can be considered speculation. The old saying, are you in it for the tech or are you in it for the money? Certainly we're investing, we're trying to provide capital to provide protocols to be able to fund themselves to go and do what they want to do and achieve these things. And that's that is a thing of the capitalist economy, the model. But that's, the tech is still important. And I know that there are people that, that do invest in the tech, that do invest for the tech. But ultimately it's about making a return on investment. And I think, you can argue that the traditional finance system is maybe not broken, but it's certainly aged and crumbling and coming under pressure. And blockchain is the most obvious alternative to that in terms of taking us further into this century in financial transactions. And yeah, that's really where things are heading. So I think that the future is bright. As I said at the start, we are still early. And there's a number of opportunities, but there'll also be a few false starts as well. Inevitably, we've seen that before. That you look at the top 10 tokens that were around last time the market was strong, are not necessarily the same top 10 this time around. So yeah, it's very interesting and something that needs to be kept. Keep your finger on the pulse.
Well, that's great, Greg, and we'll have you back every month. The same week each month so that we can talk about the market, we can talk about the movements in the market, the sectors that we're looking some focus on today. We talked about AI, DeFi, Solana, and of course, Bitcoin still being very much strong. And I think we put tokens of meme coins into some context, being only this 2.4% of the marketplace, yet there's so much discussion about it. And so this is the market that we swim in. Occasionally I've referred to it, Nitin, along the way, as a very large river filled with eddies. And we don't know which is the eddy that's going to be active next, but we do know where the river's heading. And it's heading towards the ocean, and it's heading towards a major role in commerce. And that's how we will invest. We'll spot these eddies, we'll engage in them, but we know we're heading ultimately towards a very strong market sector. Fantastic having you along, Greg. It's great working with you too. And ditto, Nitin.
Of course. Likewise, Greg. Thanks for, again, your perspectives. I think this is a great trend that we do this every month, which provides a more comprehensive perspective, both from technology side, investment side. So this is certainly a value add for our investors, for our audiences.
Yeah, pleasure. Always enjoyed coming on and speaking to you too.
Direct.
Likewise.
Excellent. Bye for now, guys. We'll see you in a month's
Yes.
time, Greg.
Take care. Bye, Greg. Calm your dog down.
Oh, dear.